Okay, so applied overhead for jobs 136, 138, and 139 are going to wind up being put into work in process inventory because those are the three things that go into work in process: direct material, direct labor, and applied overhead. So the total of the overhead amounts 78, 75, and 24 came out to be $177,000. And the debit goes to work in process. The credit's going to go to factory overhead because this is going to be the offsetting entry to the factory overhead account. The debits go to actual overhead. The credits go to applied overhead. And then we'll figure out the differences later, okay? All right, that was number 5. Number 6, we then transfer those same jobs to finished goods, because they have been completed now. So I need to now total up these 3 jobs. So the total cost of job 136 came to $84,000. The total for job 138 came to $131,700. The total for job 139, $139,400. Alrighty, and then all 3 of these totaled up are going to be transferred out of work in process into finished goods. So I'm going to debit finished goods inventory. For the total of those 3 jobs, and that comes out to be $355,100. And then I'm taking it out of work in process inventory, so credit work in process inventory. So I'm literally pulling it out of one bucket and putting it into the next bucket. $355,100. Okay, everything cool so far. I then sold those same jobs. Oh no, I only sold 2 of them, 136 and 138. So I have to now do a journal entry to record the sale for that was on credit, and then I'm going to have to record the transfer from finished goods inventory to cost of goods sold. All right. So the sale price was $525,000. So the journal entry for this is going to be a debit to accounts receivable on credit for $525,000 and a credit to sales. That's the first part of this transaction. The second part is the recording of the cost of goods sold. So cost of goods sold has to be for the total cost of jobs 136 and 138. So 136 and 138, $84,000 and $131,700. That comes out to be, drum roll, $215,700. And the credit goes to finished goods inventory. Okay, everything copacetic so far. Number 8. We then record some other things that go into factory overhead, and those are, accumulated depreciation, insurance, taxes, stuff like that. Okay, so they list them out: depreciation on factory building and equipment, insurance on the factory, property taxes. Those are the things that are the other stuff that doesn't get tied to, so it's going to wind up being part of overhead, okay? And instead of doing the journal entry you're used to doing where you debit depreciation expense, credit accumulated depreciation, the debit doesn't go to depreciation expense. Where does it go? Factory overhead, that's right. So I'm going to wind up debiting factory overhead for all of these. And I'll conclude this in the next video.